Okay, the 200-day moving average is the bold red line. That's the 200-day moving average, and again, it's the moving average of the last 200 periods. That's a graphical representation of that.
Yeah. So what does that mean? That means at every point that you see as you go back in time, that point represents 200 days of closing prices for this particular company's stock divided by 200.
Exactly.
So every point is 200 days in the past. So the closing price 200 times divided by 200 from the previous day. And then it just goes back, and it plots that chart. We're using the exponential. It smoothens out the curve from wild volatility swings. So, and the key is that the stock price of any company that you're plotting the 200-day moving average or the exponential in this case, you really want that stock to do what, Patrick?
You want that stock to be above the 200-day moving average.
And now where's the stock? Let's make sure we're not making any assumptions. So where's the stock?
It's currently well above its 200-day moving average.
And what's representing the stock price?
It's this black line here.
Thank you. So,
and this black line is consistently above its 200-day moving average. Gotcha. I mean, there might be the odd period it may kiss it or just momentarily go below it, but that's usually they're very unusual. If the stock is the company is a strong company and is reflected, that strength is reflected in the stock price, as it is in this case of Eli Lilly.
And the further you are above that exponential 200-day moving average, meaning the further the company stock price, represented by the squiggly line, is above, the more it's growing, the better it is. And you can see in this case, Eli Lilly is well above. But this is a 5-year weekly chart. So each plot on this chart represents 1 week closing price for Eli Lilly. So long term, you want to look at the 5-year for any company. And then you want to dial it in from a long term 5-year 200-day moving average to a 1 year to 9 month to get a more recent view. And that's going to switch the frequency from, and let's go point to the frequency up there, Patrick, please. That's going to change the frequency from weekly to daily. Can you circle that, Patrick, so that people can?
Yeah, right here.
And go back to 5-year. It automatically does it. So you'll see that the frequency automatically goes to weekly. So each plot on that chart represent a weekly data point. So now let's go back to 1 year. Let's do 1 year, Patrick. Let's do 9 month. 9 month is good as well. That's going to show a daily frequency. And you want to make sure that your stock price stays above that exponential 200-day on a shorter period of the same graphical plot. So what are we looking like here, Patrick?
Well, this is on the 9-month chart, and it's always above the 200-day moving average on a 9-month plot.
And go ahead.
So this is the 200-day moving average here, and again, it's sloping upwards. And then this black squiggly line is the average of those are the actual closing prices.
The daily closing prices of Eli Lilly, the stock.
Right.
And then if you were to go down on the x-axis, you can see, the months. So we're not talking in terms of years. You can see this is the course of 9 months. So the charts are really great for, just a quick look to see if you have a growth stock. And we keep covering the same things over and over so that it will sink in. This is super, super important. This is the basis of technical analysis and picking the right stock. And Patrick, you always talk about the exponential 200-day moving average pointing up versus pointing down from left to right.
Yes. And then what I could do is I could show an example of a stock that trades down. And this is something you may want to avoid.